Now for FinTech, to Andre Casterman, head of the ITFA FinTech Committee and of Casterman Consulting, we see potentially a lot of change happening in FinTech.
Thank you, Sean, and welcome to all of you this morning. If you're based in Europe, good afternoon, good evening. If you're based in Middle East or Asia, and we are delighted to be running this webinar on the ITFA side together with Trade Finance Global. We want to address here in this section the technology-related topics and the consequences of the coronavirus from a technology point of view. As you can see on this slide, I'm an independent consultant working with a series of fintechs, including INTIX on data management and Tradetech on trade distribution technology. First, let's look at the unexpected impacts on people and businesses that COVID-19 had since a couple of months, and more importantly over the last 2 weeks. Cross-border trade is definitely impacted, as on the social, logistics and transport aspects we need to indeed avoid meeting people, avoid physical contacts, not only with people but also with some material, and postal services are being disrupted because flights are disrupted themselves. So the economy is at risk. Businesses are in particular vulnerable position, and as the economies are stalled, basically. So government are announcing more and more ways to extend financial support through loans and guarantees. We'll come back on that. An example on this slide of the dangers of this virus, living for hours, as the title says, in air particles and days on surfaces. I think we'll know more about this over the coming weeks as research is ongoing. Similarly, on this particular example here on the transport side, the flight suspensions are definitely slowing down delivery to China, which has severe consequences for us working on documentary trade and depending on the delivery of physical paper documents as part of financing and risk-related transactions. So this whole situation is creating a series of challenges, no doubt, risks for sure, and as well as new options that we need to carefully consider on the trade side. So specifically for the trade community, in terms of people, logistics and trade related aspects, the work from home is now becoming the norm. The electronic signatures and documents seems to suddenly being preferred compared to wet inking documents and hoping those documents reach the right signatory. Definitely the government support is being offered with new issues for originators who want to pass on this government support to SMEs, but could face in this process balance sheet constraints. So we are looking at new digital options that are actually available since years, potentially since already adopted by multiple organizations, but I think a lack of adoption is still the issue here. So we don't need new technology, we need the available technology to be implemented in order to support those, in order to address those issues. Here is an example of Germany raising debt as part of a 350 billion emergency package. This includes unfunded as well as funded participation of supranational organizations, governmental organizations into the economy, and we'll come back on that in a few seconds. So from the ITFA side, definitely I'm not here to tell we need to invent more technology. We have no time for that. I think the technology we have through various fintechs, we have on the ITFA side 23 fintechs now registered to ITFA, and as you know, there are many more in the market. But if we concentrate on the 23 we have in the market, The key challenge in the very short term, in the next few days, weeks, is to increase our openness to those available digital options. Often, the adoption of those seems to be slowed down by a lack of priorities within banks. Now, we have all the reasons to indeed implement some of those technologies, such as indeed data management technology, to enable secure remote access to internal systems whilst at the same time protecting those internal systems from remote attacks. So having a double data layer is what data management technology can help financial institutions implement. On the INTIX side, for sure, this is working well for the current clients, and we hear it from them as they are adding a number of users onto that available technology. So technology can help to ensure people working remotely continue to operate as if they were connected to their internal network whilst they're working from home. Similarly, we know within ITFA we have digital document checking technology vendors such as TradeStream and a few others, and they are critical in the trade back office to ensure document checking continues to be operated in a fully digital way. That means no need to get hold of the paper document. People can check documents as those documents have been scanned, understood by the technology, and pre-validated by those technologies. And indeed, for those institutions that have already adopted such technology like TradeStream, this is definitely making a big difference when people are working from home and being able to perform their job wherever they are, as if they were handling paper documents. On the logistics side, definitely we hear from people that wet inking, as I said, is not possible anymore, as documents are not reaching the right people. Not getting access to those paper documents is an issue when you need to put your own signature, whilst if you're using electronic signatures, for instance, as part of the European EIDAS, or whether you're using electronic payment undertakings, as ITFA is rolling out through the Digital Negotiable Instrument Initiative, those solutions, available technologies, are making things much more digital, sometimes fully digital, and enabling you to run your business as an originator and extending funding to your corporate clients, including SMEs, on a fully digital basis. So very important also to signal those technologies are available. It's a matter of adoption. We need to increase our openness to those options. And finally, on the funding side, definitely the trade banks want to now allocate those the government support, the public funds, and via loans, but also those public funds can be allocated to SMEs and mid-caps via trade receivables or payables. This is another option that we need to highly consider. Technology makes now this happen through the TFD initiative and the Tradetech platform. So meaning that government funding, rather than extending that only through loans, can also be allocated to your corporate clients on a much more targeted basis, with full traceability of the impact and the use of those funds through receivables and payables. This is definitely operationally far more challenging if you do that on a manual basis, but technology makes a difference again. Some corporates will also want to work with alternative financiers, with non-bank funders, with asset managers that are entering the market since a couple of years. So these are also available options if they can't work with their traditional payment banks or cash management banks. And those are also accessible, I would say, via online receivables platforms. I can name a few like Liquidex, Trustbills, Levanter, Finan Exchange, Demica, and many more that you would consider within your country. So finally, on the ITFA side, we have 23 fintechs indeed since since we launched the fintech committee. Here they are. You see all their logos. They address very specific pain points, as some of the ones I mentioned in the previous slide. They can do much more, which we can certainly discuss over time, but on the ITFA side, we're definitely committed through the Digital Negotiable Instrument Initiative and the Trade Finance Distribution Initiative to make sure that those very short pain points are can be addressed through those technologies, and I will be happy to take your questions in the next few minutes. Thanks again, Dipesh, for organizing this, and for Sean for inviting me. And let's move on to the questions. Thank you. Over to you.